Hey traders, I'm James, one of the content team leaders here at A1 Trading, and as we start today's stream, I wanted to let you know about one of our show's main sponsors, FX2 Funding. With all the craziness going on in the prop firm space, we're excited to share some of the solutions FX2 Funding has put together for their traders. First, FX2 is rolling out DX Trade, which is a web-based trading platform that provides traders a smooth trading experience. It also looks super cool too, but that's not all. By signing up with FX2, you get access to C-Trade. C-Trade is a trading terminal where you can create custom indicators or download ones from the community. Get access to all of this and more by signing up for FX2. So, for traders looking to get funded, you can get 15% off by using promo code A1Trading15. That's A1Trading15. The link and promo code can also be found in the description. Now, onto the show.
All right. Good morning, everybody. Thank you for being back on another live stream with us here for another big event. We've got NFP. This is jobs data. This is big stuff, guys. Thanks for tuning in. Welcome back. It's Pirate Theme Month here at A1 Trading. Don't ask why. We just changed the stream things because we do this day in, day out. You got to keep it fun somehow. So for the producers, they have a great time, and I love watching what they come up with in terms of stream theming. So I am a pirate this month. And, we had somebody already playing along. Dan in the chat says, Nick, where are you? Which is perfect. So good morning, everybody. Good afternoon. Thanks for being here with me. We got a lot to talk about. We had earnings from Apple, which was another one of the big names, of course, in the big tech world. We have the dollar index coming down ahead of jobs data, which will be very interesting to see if this is going to catch a bounce or not. And in this live stream, we're going to be talking everything from currencies to commodities to stock indices and maybe even some individual stocks with that Apple movement that happened after hours. I'm going to give you my take on that, of course. I just want to ask also, is the stream quality better today? We upped to the max possible package on our streaming service that we use. Cost a pretty penny, but I'm hoping that for you guys, the stream quality is a little bit better. Let me know. Is it 1080? It should be 1080. If it's not 1080, I want my money back because I could have used that money to buy a bigger hat. This hat, it's big. It's really big, but it could have been bigger. And I chose to spend the money on you guys to give you guys a better stream quality. So the reason I don't have a bigger hat is you. All right. Anyways, just joking around. Good. It's 1080. Let's go. That's exciting. All right. So let's talk a little about the dollar index. Dollar index is pulling back here ahead of jobs data. And we're going to draw some setups here. So what we're expecting here is less than last time. We're expecting in terms of forecasts from analysts, 238,000 jobs. Last time it was higher than this number. You can see last time we had 303,000 jobs added. We're expecting some lighter numbers here this month. One thing I want to tell you right off the bat, Frank came into my office yesterday. You guys know Frank. He's my first mate on this ship that we're on for Pirates Month. He came into my office and he said, Nick, jobs data has been consistently higher than expected in the last several months. And I said, well, let me take a look at it. I know off the top of my head, I'm like, yeah, it's been pretty hot. But what I'm realizing here, guys, is the red dot is your forecasted number for jobs. And the blue column is what actually came out. Now, the yellow line, by the way, that's the revisions that we've added to our jobs data chart here on the Edge Finder. So check this out. Each time in the last 4 NFPs, actually 5 NFPs, we have seen jobs data come out higher than what was forecasted. Okay. So what you have to understand here is that we've been on a trend of hot labor market data. Today, we're forecasting for, again, 238,000 jobs. If we come out higher than expected, what does that do to the dollar index? Well, it makes the USD look strong because, again, that's saying, hey, the labor market in the US is strong. The dollar is a safe haven. Let's stay long dollars. That's the basic idea. Now, what about if jobs data comes out weak? Of course, it's the opposite. Jobs data being weak would push the dollar down. Now, again, if the trend is our friend here, we would probably expect strong jobs data. We've seen this theme. The U.S. economy has stayed relatively resilient despite what has been in recent times higher interest rates Long term, it's about average interest rates, by the way, where we're currently at. It's just that we've gotten used to in the last decade or two, much lower interest rates on average. So regardless, there's a lot to talk about, so I'm going to try and keep it fast paced. But what we're looking for also is we got claims data here earlier this week, came in just slightly less than what was forecasted, but not by much. JOLTS job openings continuing to trend down. If we're talking about unemployment rate, this is another big one today, guys. The question becomes, are we going to see that unemployment rate tick higher, or is it going to stay flat or lower? Again, if you're talking a strong labor market, so if you're a dollar bull, you want this number to stay flat or potentially go lower. Let's see what the forecast was again. So real quick, forecast is 3.8. So they're expecting it to stay at where it currently is in terms of the unemployment rate. This is the percentage of people filing for unemployment. So if that number is, the percentage of people who are actively looking for work, filing for unemployment, right? 3.8%. Data comes out in 7 minutes, guys. The data, all three of these are very important. I know that, it can be a bit confusing to look at all three, but this is why we look at all three. Each one of these is a very important read. The jobs added is just a simple read of straight up, how strong is the economy? How many people are getting jobs? That data is very important. Unemployment rate, for people who are looking for jobs, how many of them are filing for unemployment? That's also a really big barometer of what the jobs market looks like. But this one, don't sleep on average hourly earnings. This is so important to the inflation story. Now, let me just say and disclaim this. Average hourly earnings, this is wage increases. Are people getting raises? Now, I know everybody wants a raise. I'd take a raise, right? I'd take a raise so I get a bigger hat. And if I want to raise, what that does is at a broad level of everybody's getting raises, what it causes is it causes inflation, right? If everybody gets raises, they go out and they buy a boat, or they go buy a new fishing rod, or they go buy a new house or a car or whatever, or dare I say it, they go buy a bigger hat. And they've bought this bigger hat, and now the prices of hats are going up. And poor old Nick can't afford a hat no more because he bought the stream package that made the stream quality better today. And where's my claps? I got to get my claps for this, because come on, that's exciting stuff. Stream quality going up faster than inflation, and that's pretty fast. Okay, so we're coming in here. We are just 5 minutes away from the jobs data coming out, as well as the unemployment rate. We'll have to see what that brings. Also, do me a quick favor. If you like the hat, smash the thumbs up button on the stream. There's 1,000 people watching, 1,000 beautiful people. Thank you very much for hanging out on the beach with me today. If you could do me a quick favor, hit that thumbs up button, support the stream, help us out here. We are trying to grow the best stream on YouTube for big hats. So make sure to smash the thumbs up button. Go home, go big or go home. That's exactly how I felt when I put this hat on today. Let's keep going here until the sharks get you. Nick, you're getting too comfy. Yeah, you're right. I'm not going into that water. You guys think I go into the ocean? What are you, crazy? No, pirates don't actually like to swim. They like to stay on the boat. They like to slash from the land. You know what I mean? Okay, so dollar index is coming down. I think that if you get weak jobs data, let's talk a little practicality here. If you get weak numbers today, what I'd watch for from a price action standpoint would be a break underneath this level. If this breaks, I think the dollar uptrend for the time being is really under pressure. I said that about this level here too. So let me be clear. This level is already broken. So short term, the dollar index is looking a little weak, but I think jobs data today will either reverse that and potentially get us to go back higher, or if you get weak numbers, it could go lower. Now, I don't try and forecast better than all of the economists that forecast for the forecast you guys see on the internet. So I'm not going to try and forecast what jobs data is going to be. Instead, what I'll tell you is I'll tell you what I'm going to do based on what that does, so, or what the number is. If we get really weak jobs, or a surprisingly weak jobs, or unemployment rate ticks up, yeah, I think the dollar bullish case, I've got to pause on that, and I'll probably get out of the way of any trades that I have on the dollar on the long side. But tactically, I'm still bullish on the dollar. I still think that the U.S. economy has been surprising in many ways, and will continue to be surprising. So if we get good jobs data, what I'd be looking for is on the daily chart. Let's see if we can break back into the 105.5. I think that would be a very bullish setup for dollar bulls watching the chart here. So we're looking at the dollar index. This is a key indicator here. Let's talk quickly about gold. We've got just a few minutes, so I'm going to try and stay quick for you. So we're trading at just under 2,300. This is pivotal for gold, guys. I mean, this you could not set up a more interesting chart ahead of NFP for gold, because check this out. It's clear we've lost, this may look like a slight pullback on the daily chart, but that's just because the volatility has been so high. This is still a pullback, currently speaking. We're off $135 an ounce from the highs. I mean, that's a substantial pullback here. The question is this a pullback or is this a reversal? And I think that if you see really hot jobs data today, it's possible that gold could start breaking those lows. And perhaps, I made this point yesterday, perhaps the next area of support that we have to go to is all the way down here at 2,200. Is that going to happen? Well, again, see what the jobs data brings us. The jobs data won't bring us all the way down there. That would be, if it does, oh my gosh, that you like tripled the expectations for NFP. But if you want to see a trend start to form to that downside, if you're a bear on gold, you're probably looking for that jobs data to come in real strong. Conversely, if you get weak jobs numbers, the market's going to celebrate the prospect of potentially rate cuts are still on the table and could rally higher. So how that will actually impact my setups is, of course, we use the Edgefinder's top setups algorithm to generate bullish and bearish readings. We're going to be looking at these columns, the employment change and unemployment rate. These statistics will update here shortly after the data comes in from NFP, and that will impact our total scoring system. Now, gold will be very interesting. Let me tell you right now, if you get weak jobs data, this is going to tick into a bullish setup for the Edgefinder. So heads up, look at this, guys. The way this works, the software is tracking the data as it's coming in. When that data updates, if it comes in weak, these are going to flip into a bullish territory, just like the other ones, like other markets, right? And it's going to say, oh, now gold is going to get a plus. What would that be? That'd be a difference of 2 on each of these. So we'd get, a +7 on gold all of a sudden, right? That's a bullish setup for our algorithm, right? So we are watching the data. This is how the data impacts the setups. We're getting really close here. I'll tell you guys a little bit more about this out. So let me just quickly move over here so that we can see all markets. So real quick, S&P 500, NASDAQ, you got your Dow here. Here's the dollar index, euro, pound, gold, and we've got oil in the bottom right. So there are all your charts here, guys. We're coming in very close. So let's go ahead and roll our breaking news. All right, coming in hot here. Let's see what we get for jobs data for the month of April. All right, and jobs data is out. Dollar index coming down hard here. Gold jumping, pound USD jumping, euro dollar jumping, stocks jumping here initially. Let's have a look at the reaction. 175,000. Wow. Okay, so a lighter print here. We're now seeing. So the market's going to cheer this. I can tell you that right now. Market is going to cheer this. In terms of the market, I'm talking about the stock market and gold, really. They're going to cheer this because what this suggests is finally, maybe we're starting to, it's a little bit early to call it all off, but starting to see some weakness in the labor market. And if that happens, you've also had a round of earnings reports and also average hourly earnings came out light. Wow. This is slowing in the jobs world. That is a surprise here to the downside here, guys, when it comes to labor data. Again, that justifies completely a sell-off in the dollar. And you can see that is happening currently. There goes the dollar index breaking through that level 105. So dollar bears, maybe you have your day here. Maybe something is starting to form. What this would tell me is that retests are probably looking like bearish setups now, surprisingly. But again, you've got to stay data reactive. What we've got here is in front of us, very clear. All reds, what that's telling you is average hourly earnings came in light. Jobs data, jobs change came in light. They did revise the previous slightly higher, but still we are down significantly. We've got a 1 handle here for jobs change. And then unemployment rate actually did tick up to 3.9%. So what the market is going to say likely to this is, well, rate cuts are still potentially going to happen this year. Now, again, what you need for rate cuts to not happen this year is you need just rock solid jobs data that's going to push back on that. Doesn't seem like we're getting that. In fact, again, big slip to the downside on the dollar index. Let's have a look at gold, see how things are forming over there. We'll pull up gold here. So gold, again, bouncing off this level, as we mentioned. The question is, can it persist? Can you get, breaks of structure here? There's a couple levels here. If you're watching gold, here's some things to look out for. And I'm like I said, I'll probably be looking at gold setups myself here pretty soon, simply because the way the Edge Finder is calculating a score for gold, once this updates, it usually takes about 5-10 minutes max. This will flip. Both of these are going to flip bullish. Unemployment change was lower than expected, so we factor that in our system as bullish for gold. And unemployment rate ticked up. We call that also bullish for gold. That's a difference of you go -1 to +1. That's a range of +2 and another +2 on the Edge Finder scoring. What you're left with is a significant change to +7 on gold. So I am actually looking now for gold bullish setups. So how am I playing that? Again, kind of a turnaround. I thought we might break that level, but it looks like we might have some reason to stay convicted here at this level around 2,300. Perhaps 2,300 is the dip. What I'd be looking for, again, from an entry point on a 4-hour perspective, I'd like to see if we can follow through a little bit, right? Break out here, pull back here. I like that. I like that setup. It's my personal opinion. As always, remember, I'm not here to give you financial advice. Do your own thing. I trade my own money. You trade yours. I'm not here to tell you what to do with yours. So I'm watching for a breakout on gold here now that we've spoken about the numbers. Again, NFP came in very, very light, and I think gold is probably going to cheer that. So, yeah. Let's see what else is moving. So stocks are loving this. The S&P 500 up, 0.75% on the day. The NASDAQ is up just shy of 1%. The US 30, so this is your Dow Jones Industrial, breaking out and looking really strong here. Now, Russell, not so good. I'm probably going to take a loss on the Russell. UK 100, German 40, we do have some other stock markets reacting here. The VIX is dropping off of a cliff here right now. My goodness. Big drop in the VIX simply because, again, this is going to relax the market's volatility because now we're starting to see the jobs data come in a little bit light. You've also seen the consumer come in a little bit light. I don't know if you guys saw this, and if you don't trade stocks, bear with me here. Apple's earnings came out after the bell yesterday, and they actually were not impressive at all. You might say, well, then why is the stock up? Well, let me tease you for a second on why the stock is up. Why is the stock not down? Well, it's a little bit confusing because revenue was pretty disappointing. Revenue hardly grew. I think we actually had down revenue year over year. iPhone sales were not impressive. The Vision Pro, don't get me started. That seems to be a big flop. The point is, when you're talking about Apple and their revenues, they were not impressive. So why on earth is the market up? Well, the reason that the market is up is because we had announcement of buybacks and a dividend increase. Now, bear with me for a second. Again, if you're not a stock person, let me just tell you what you care about. You care about this part. Because Apple is a huge consumer. I mean, I practically think of it almost as a consumer staple. Even though it is a discretionary purchase, people are, dependent on their Apple products. They purchase Apple products like crazy. It's hard. It's not even really like for a lot of people, it's a must. That's just what they use. They use Apple. They've used it for 10 years and they're not going anywhere else. So it's almost a staple. That being said, Apple, their revenues were slightly lower, showing that, again, the consumer may be starting to feel a little tapped out. You also saw that in Starbucks. Starbucks came in a little bit light. So the revenue was unimpressive, which again acts to support maybe what we're seeing here today with the labor market. Perhaps the consumer is just feeling a little bit of the squeeze. Now, again, if you want to ask about why Apple is up, they announced that they're going to be buying back their own shares, again, using their cash on hand to buy their own shares to help out the shareholder value, the good old fashioned shareholder value. And they also said that they're going to be raising their dividend, which again, the market cheered that. But again, falling revenue, I'm not super impressed. I'm not an Apple buyer here today because, again, I don't love that story. That being said, the market is really excited to see that jobs data is not not too worried about jobs data coming in hotter than expected. That ends, by the way, a 5-month streak of higher than expected jobs data. Also, let me not give myself terrible hat hair today and keep wearing that hat. So they're cheering the idea, the prospect that, hey, you know what, maybe rate cuts are still a possibility. And so the market's going to like that. I do have some technology holdings that are going to look really good today. I sold puts on SMH. Now, what's not going to look so good for me today is I'm probably going to take a loss on my Russell position. That is moving against me here today, but I'm somewhat hedged. I have lots of tech holdings. I sold puts on SMH. That's going to look really phenomenal today. I have a position on XLK, but I'm not logged in right now. You can't see it. But XLK is very much in the green now, and I may even look to start selling calls against this. Does this change everything for me in terms of perspective? Well, I'll tell you, it changes some stuff. Gold here, again, once this updates, the employment change updates, that's going to look really good. And I might actually be a buyer of gold on pullbacks going forward. Now, in terms of the dollar perspective, it's a little wobbly because this takes out some of the significant, reasoning why I was so bullish the dollar, right? I stopped out on Euro USD. I imagine. Yep. I stopped out on euro dollar. So this trade went against me. And again, downtrend seems to be cracked here. So again, you just kind of have to move on. A loss is a loss. And you just say, hey, you know what? The jobs data disappointed. And now you have to just be reactive to what you're seeing. For me right now, the story was jobs data being super strong is going to just carry the economy into, no rate hike land. But it seems like perhaps that is changing. So you got to change with the times. So taking a look at the 4-hour chart, again, supply on the 4-hour chart, what was this key area that I thought we would bounce off of? Clearly, the jobs data reigned supreme. And this goes to show, I talk about this often, you can have the prettiest technical analysis chart in the world. But at the end of the day, fundamental data, economic data, the macro, is the real story. It really is what drives price. It's not technical charts that drive price. It is 100% the market data. That's why your biggest candles are always associated with some significant economic data point or Fed announcement. It's because that stuff matters the most. So we've come back to the support level, and what I thought was going to potentially hold doesn't seem to be holding. So as we continue to drive lower, again, this is across the board a very, very weak jobs data point, 175 compared to 238K. Now, let me also add one thing for context here. This is just one print. The market is cheering this because obviously this is not a terrible print, right? It's not just, endless hot jobs data. So they're celebrating this. But you have to remember that, NFP coming in light this time around doesn't mean that it's going to just be, it could just be a pause before another higher than expected, right? It's possible. Really a trend should be a couple months of economic data. Really, for me to build a decisive opinion, I like to usually say about 3 months of data is pretty important, right? If you see like a 3-month trend, typically that is a little bit more valuable than just a singular print. So yeah, just be careful. Also, in just a little bit, we also have ISM Services PMI. This data comes out in just about an hour and 20. So we'll stay live here, hang out with you guys. I'm sure we'll have some people join us and hang out for a little bit at some point here in the show, which will be fun. And we keep going. By the way, real quick, let me ask you guys, which charts would you like me to look at? Matthew says, take a look at AUD USD. Why not? Let's take a look at the old Australian dollar and see what's going on there. The Australian dollar loves this, by the way, because again, what you're seeing now is you're seeing the just undefeated labor market in the US starting to show signs of cracking. Maybe it's not so impossible for the jobs data to start to come in cool. So we're at a level of resistance if you're watching the Australian dollar. And I know the temptation is probably there to just sell this, but for me, I can't really justify, just selling this. Now, if you get a weak candle here, like if you see like some rejection, I think you have to look at the full picture and you say, okay, what's the full picture look like? Well, let's take a look. So the full picture, if I go over to our data scanners here for a second, and I want to pull up the Australian dollar here. Okay, so Australian dollar is -4. Now, what you have to understand is this data will be updating soon. This algorithm factors in. It's usually on a 30-minute timer. So pretty soon it will update. And once it does, what you'll see is that, again, we're going to get a neutral reading here. That's, again, when comparing everything from GDP, PMIs, manufacturing. So at the end of the day, basically, long story short, Australian dollar too neutral for me. There's not a clear, decisive winner when looking at the data here. So chart-wise, again, if you're a seller, I'd wait to see how this candle closes. But if you're a buyer, I'd say, let's see if we can break outside. If we break outside, my opinion would be it looks like technical-wise, it could continue. Oil, people asking about oil. Yeah, let's have a look. So oil probably not going to absolutely love this data, but not going to hate it either, because it might suggest rate cuts that could stimulate the global demand for oil at some point. But really, strong jobs data now would have been, more attractive to oil, I think, right? If you just had really strong jobs data, again, the demand for oil is very supported. We've seen recently on the daily chart that oil has broken a key level of support. I actually think, I don't think we have a setup on the oil market right now. Let me double check that. Yeah, oil is just neutral. But from a technical only perspective, again, this level here broke out, support broke. Pullbacks into that, to me, I'd be a little sketched out to be a buyer, simply because this area, again, if buyers were really strong, I would have imagined they would have held that area. Pound USD, sure. We'll look at GU. Pound USD, look at this, completely flipped. I thought we'd see a bigger sell-off than this. I shorted the euro instead of the pound. Again, stopped out for me, so not working out on that one. But pound USD, also I thought this would have a sell-off, did not. So bit of a flip, bit of a turnaround here in terms of the data here this morning. What I'd say is if you're watching the pound USD, keep an eye on the Bank of England as always. Same thing with the Fed. In terms of pound USD, we're getting a neutral reading, so no setups for me on GU. Technicals, let's see if you can break structure. Maybe you're starting to form a bigger uptrend. We'll see, but nothing too solid there for me in terms of setups. US 30, let's take a look at it. US 30 is the Dow Jones for those of you guys who trade futures. Dow Jones here, nice little breakout. Again, breaking through resistance. Let's see how this candle plays out. You have support that was over here. It became resistance. Now we're breaking through that level. Watch the candle closure today. If you get a nice solid candle closing outside of this level, maybe you've got something here. Maybe the bulls are back for the stock market. But I'd like to see a strong candle similar to this one breaking outside of resistance. NASDAQ, similar story. We're trading into a level of resistance right now. Be very careful that you don't get too overhyped on this, because here's my opinion on this. Is this jobs data really that bullish for stocks? Let's answer that question. Is jobs data coming in light good for stocks? Here's my opinion on it. I think people who are craving slowdown in the labor market, it's like saying, I want to get more sick so that I can have some medicine. Does that make sense? Not my analogy. Josh Brown on CNBC said that yesterday. I'm stealing his analogy. But let me say that again. Hoping for weak economic data is like saying, I want to get more sick so that I can have some medicine. If that makes sense, do you guys get that? Type yes in the chat. If that makes sense, that's what you're hoping for stocks. You're saying, I want the economy to weaken so that I can have stimulus so that I can have, yeah. Anyways, my point is, I'm a fan personally of being a stock market buyer when you straight up have good jobs data and cooling inflation. Obviously, that's what everybody wants, right? Nick, you just explained the perfect scenario. I am aware of that. But to me, it's like I don't really want to see the Fed change one problem for another. Yes, you might be able to get rate cuts, but is that because the labor market starts to really cool and people start becoming unemployed? So, wow, we're getting lots of no's. You guys didn't like my analogy. I'm sorry. Apologies for the bad analogy, I guess. What I'm trying to say basically is if you are looking for labor market data, economic PMI data, all that data to come in really weak so that you can have rate cuts to get the stock market to go up, to me is just a weird one. I prefer the idea of the data stays relatively strong, but then we find a way, we see the inflation print start to come down. If the inflation print is coming down because the economy is really struggling suddenly, that's not very exciting. People are saying gold reversal. Check the gold chart. Let's take a look. Yeah, wow, gold really did reverse that. Gold really reversed that, and that might be a buying opportunity in my opinion. Let's see if the Edge Finder's updated yet. Not yet. So, I'm going to watch gold here. So labor data coming in weak. If I'm going to be a buyer of something off of weak labor data, to me, it's not going to really be the NASDAQ and the S&P. It's going to probably be more gold. I'm done for today. Awesome. Silver. Yeah, silver not as excited about because, again, if there's slowing in the economy, yes, rate cuts would be good for silver. But if we're getting rate cuts because slow economic data, I'd rather be in long gold. Wait for PMI. No direction in the market. Yeah, that also might be a worth mentioning, guys. Wow, what a reversal on gold. My goodness. One of the reasons gold might be completely reversing here, just an idea, is maybe PMI data is also very important to the market. I believe it's services. Yeah, ISM services PMI. This will also impact the scoring on the Edge Finder too. Edge Finder has euro dollar shorts. That didn't work out. Yeah, you're right. I got stopped out on the euro and totally whiffed it on euro. Again, the Edge Finder is, I wish I could tell you that it's a holy grail magic money system, but it's not. Nothing is, right? Because if you looked at the conditions yesterday, people wouldn't have, expected, most people were not expecting labor data to come in really weak. So the market, the Edge Finder does not tell the future, and I take losses frequently. In fact, more of my trades are losses than wins. It's just that I typically hold winners very well. So a good trade periodically will really pay off all of the losing trades for me. So yes, took a loss on euro. That's all good. We move past it and we find more setups. There's no shame in taking a loss. I think one of the characteristics of losing traders is they're so terrified of taking a loss that they take it so personally when they have a loss. Nobody likes losses, but they're inevitable. I've been doing this for a long time. I could tell you're never going to avoid losses completely. Losses are going to happen. The bigger question is whether or not you have the discipline to sit through the losses and to sit and hold on to the right trades. Does that make sense? If that makes sense, if that resonates with you, if you're on the same page, if you accept that, you can't be, the old adage, scared money don't make money. I know it sounds like that's like something you would say as you're going into the casino, but genuinely it is kind of true in trading. If you're scared to take losses, if you're scared to hit a stop loss, if you're scared to talk about it, I'm in front of 1,300 people. I had a loss here today. 2 losses today. I'm short the Russell. That didn't go well. I'm short the euro. That didn't go well. But it doesn't mean anything in the long term, right? If you look at someone's equity, if you understand back testing, right, there are many losses in a profitable system still. A loss doesn't mean anything. It's the long-term results of someone's trading that matter. At the end of the day, in 5 years, are you going to be better off because you're trading your system, or are you going to be worse off? It's all that matters. A loss happens. So I took a loss on euro. I'm looking for the next setups. Move past it. Salute that trade and move past it. I'm telling you guys, smash the thumbs up button if you're on the same page. Real quick, guys, we got Kenzo from Extra Hot Forex coming on to the show to talk about some fundamentals today. It's Fundamental Friday, so stick around. We'll be right back after this short break. We're going to bring in Kenzo to chat a little bit of charts with me.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partner broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, guys, and we're back with Kenzo for Fundamental Fridays. Hey, Kenzo, how's it going?
I'm doing great, thanks, and you, man?
I'm doing well. Today we got some lighter than expected data from the US in terms of the jobs data. Kenzo, I'm curious your thoughts. You know, the stock market is jumping on this news. And of course that makes sense because you're thinking, okay, jobs data light, that's going to take some pressure off the inflation story and maybe the Fed can cut rates this year. That's a very clear reason as to why the stock market is up today. What are your thoughts? Are you watching the NASDAQ? You watching the S&P or the Dow? I'll if you'd like to share your screen, feel free to go through whatever you'd like. I'm curious what your thoughts are.
Yes, unfortunately, I won't share. My network is very slow today.
Oh, no problem.
But yes, so with the actually NFP, to me, I think it's not really enough to say they're going to cut the rates. I think we still have to see CPI. Also maybe PPI and retail sales if they are going down. But if maybe NFP alone is not really enough to say they're going to cut the rates, because there are other things that are not really moving very well, especially the inflation side. And remember, this number, next month we might have another positive number. Now it's good because now at least it gives us a room to breathe on the stock market. But
Sure.
what will happen next month? What about CPI? I think CPI is next week and other ones. So that can be a problem also. Unless if maybe this month things are starting to go a little bit lower, that we can say, yes, we have confidence that they can cut the rates. But at the moment, I think no one is actually sure about cutting the rates. But yes, we want them to cut, but I don't think at the moment that it will be a good idea.
Sure. And, you know, another thing, Kenzo, is maybe that's why. Do you have any idea why gold did such a crazy move here? I mean, you mentioned perhaps this is not enough evidence for rate cuts. Of course, that's what gold is all you know, hyped up about one way or the other, is whether or not they're going to cut rates. Why do you think gold reversed so hard? Do you have any idea?
I think maybe if we check, remember the time we were buying gold, or the time the gold it was going up aggressively, most likely it was because of tensions, especially at the time we started to see tensions going all over the place, Israel and Iran and stuff like that.
Yep.
And now it seems like those tensions are slowly going down. Plus, in China, we did talk about China. I think now currently Chinese economy, it's now starting to recover very slow, but it's recovering. Their GDP was quite positive, so which means they still expect something to be positive maybe in few months, and that is good. So those people who were buying those gold, they start to see some positive light actually on other markets. That's why they're taking out their money from safe haven like gold to those stock market because they can make quick cash very quick, because actually we use gold to save our assets, not actually to make much of a profit, you see.
That's a really good point, Kenzo, because for those of you who are watching gold closely, something to consider that Kenzo just mentioned is that in Asia, in Southeast Asia especially, the Chinese stock market, for example, has really struggled, and many investors have turned to gold as an investment. I mean, it's culturally it's different there for places like where I am, the U.S. We're not big gold people. Like gold just is not as nearly as culturally important as it is in places like Southeast Asia. That being said, if the Chinese economy is starting to come back, and again, we can look at the Chinese stock market and say, well, wow, it's really started to, perhaps put in a bottom
Recover.
here. If that's the case, and you're seeing some confidence be restored in China, confidence in an economy is not a good story for gold. And not to mention, you also made a really good point there about the geopolitical situation in the Middle East. If that does not continue to escalate, which of course, from a humanitarian standpoint, we always say on the channel, we hope that it does not. We want peace in the Middle East and peace everywhere else. But without that threat, that continuous, escalation cycle going on, people move away from gold. They say, okay, maybe it's good to go back into stocks or other areas instead of gold, which is just this kind of safe, obvious answer. People go out of gold. So very well said. I think both of those are very good reasons. So maybe, Kenzo, this big pop here this morning was simply an opportunity for bigger sellers who wanted to get out to just take profits. Is that what you're thinking?
Yes, sometimes. Plus, that I think it will depend from broker to broker. Not every broker is going to be like that. But I think every time we have NFPs or let's say economic news, we have these big spikes. To me, sometimes it's difficult to explain that, but I think it's good that the market went back. So the market did not really react to that. Also on the stock market, I think the stock market will react to that, to a certain, maybe let's say support or resistance. But from there, we're just going to go back to normal. Whether we break in or do we still think they're going to cut the rates? But to me, I feel like it's not really enough. We still need to see enough data, and that will be great. I think CPI and retail sales, they can tell us something very big. Also, maybe PCE. If those are going down, we can say maybe around June they might cut. But still, we need to see some serious price drop. And slowly, we don't really see that. Now, at the moment, we don't really see that.
I think, Kenzo, what you've also pointed out there with your idea of like, this is not enough. It's a good point because, this is one print. And in order for the Fed to truly feel confident that perhaps inflation is meaningfully going to continue to trend down, I think you're dead on with they want to see the actual inflation prints start to cool off. They need to see momentum forming, not just in inflation coming down, but momentum isn't one print. So if you have, let's say that this is, well, we can pull up the chart here. I've got it on my other screen. So, this data here has been momentum to the upside. Jobs data has come in really strong. So today, this hasn't populated yet, but when it does, we'll see our first downward sloping jobs print. But momentum builds over time. And I was making this point earlier. I think you're talking about the same thing. You really want to see like 3 months. You really want to see a couple months of solid evidence that jobs are cooling before you jump to any sort of serious conclusions, because we could just be seeing, let me see if I can find an example. Here was a big drop over here. It came in lighter than expected. And then, that was one off where markets kind of got excited. November 2023, we said, wow, jobs data coming in light. And then look what happened. The jobs data just creeped back strong. So I'm totally with you. I don't think this is enough to really draw a full conclusion on the rate cut stuff.
Yeah, I think we need 2 to 3 months of that, because NFP, it's also not the whole story. So we also need CPI there, you see, because there are other things that we can also consider. If CPI is also going down, that will be correlating with the jobs. But last month we added so much jobs, 300 something is too much. Even
Yeah.
though now we did not really add much, but we still added something on top of last month. So it means we have enough people who can buy. And if people buy, retail sales are going to go up. Retail sales, they're going to push CPI to go higher, which means we're still going to have still sticky inflation. But if slowly things are starting to go lower, maybe in 3 months, things they will start to show us that, you know what, maybe we're going to see some slowdown. But at the moment, I think it's better just to apply your serious risk management, because even if you know how to trade, somewhere you're going to take some losses. These swings, they are crazy, you see.
Yeah.
So you
Yeah.
just have to manage your risk very well, you see.
So let me ask you another chart, Kenzo, really quick. We've got the dollar index pulled up here. Prices coming down from its recent high around 106.5. Now,
Yes.
I want to get your thoughts on this. If we close today above 105, is this just a pullback in the dollar index before we continue higher? Like let's say that we close a candle like this, like we get a long wick off the bottom and we don't break this level. Are you a dollar bull or are you still bearish? What do you think?
At the moment, so when I like the news, but mostly I'm not intimidated by only one candlestick, because that is not really the whole story. So which
Sure.
means I have to wait and see if maybe it's going to reverse and close maybe above. But if it keeps because you can see the reversal, it seems to be also aggressive. So maybe before we close the market will be up again. So that will be another continuation of that uptrend. But for now, since we are a little bit below that area, we can say, let's wait and see. If it continues, we can say, okay, maybe we're going to have a new downtrend, but it's not really that enough, because on my side, I also have a support line, a diagonal support line that shows a breakout exactly there on your support area. So that shows that we're trying to get out. So you can say, let's wait for the market to see where it's going to close, or maybe you can just give it a day and see where it's going. But
Yeah.
You can see that it's not really going the same way the time it was going up. So you can see that the bearish momentum is not really that stronger. But the best way is to wait and see, maybe for 12 hours, and see what's really happening.
Yeah, no, I think that's a fair conclusion. I think it's kind of tough to say just because you had one print of lighter than expected jobs data. I think that it's a dangerous game to get overly, decisively bearish on the dollar. And I'm with you. I think, if we close like this today, Kenzo, I think for me, what that tells me is I will have been wrong about some of my entries on the dollar, but I don't necessarily think the dollar bullishness is just dead in the water. I still think relative to its peers, US economic data has been really strong. There's other areas, and while jobs data and rate cuts might still be going in the right direction, I suppose, it still might be slower than its peers. We heard from Jerome Powell just the other day, Kenzo. He said specifically for the currency traders in the room, I mean, he pointed out that he thinks other central banks will cut interest rates first. And to hear it from him saying that, that's a pretty strong, position. So yes, the dollar might be down, but remember, if the Fed chairman thinks that the U.S. is probably just seeing, it's the growth that we've had has been outperforming its peers. That could lead to a point where we do see rate cuts coming for other countries, other central banks first. So I don't know if you heard that or caught that. I thought that was very interesting.
No, I did not really get that. But the way it is, I also saw, but it was last month, the Europe and also GBP or Bank of England. They actually specified that they're going to cut the rates maybe in the coming interest rates event. But after Powell said he's going to cut the rates, so I think they were just following him with the same method. But I feel like most likely the other banks might not really cut. Mostly we follow the US. To be honest, we follow the US because mostly it's going to affect almost everyone or almost every economy. So they'll have to wait for the dollar. If you check the statement, sometimes it's funny because if you check the statement from Europe, Britain, or Canada, it's just a copy and paste. It's just one thing, you see.
Yeah, no,
Yes,
right. No,
once they start up, Powell started to talk about cutting the rates, and the other banks said the same thing. But I
yeah.
understand because it's their bigger brother. If maybe you have an economy like US, and your economy it's quite smaller, but you also have relationship, so it means you have to align with each other. So, but if you check that statement, it's just the same thing.
Yeah, no, I'm with you. I think they typically mimic each other, and they all watch what the U.S. does, and they see what they're doing there. So, very very curious to see how this day plays out, Ginzo. I mean, we have the Nasdaq sitting at resistance. I mean, you're talking about this
Mm.
17,833 level currently. I mean, this is a key spot in the chart. Simply because this is where kind of the carnage got started. We saw a big sell off out of this area. But I think if you see something, I mean, if the market closes above this resistance point, I think short-term bearishness might be over, simply because, again, that's such a key level here for this breakout that we saw a couple weeks ago. So I don't know. I'm very curious to see how this candle closes today. If it closes with a long wick, that actually could spell some danger at this level for the Nasdaq, I think. But we will just have to wait and see with what
Yes.
we get on that.
Also, yes. So yeah, I think that can be a good idea because remember we had few earnings few days ago. Let's say this past weeks,
Hmm.
all those earnings of big tech companies, they were all positive. And that area that you're pointing out, it's where the market started to break out. So if we can have enough momentum to break that, I think those earnings will start to kick in because everything was positive, but we never saw any bigger move, you see. So it's
Yeah.
like the market was just digesting that because of interest rates. But if we break out of that, I think it's where maybe today or maybe next week, it's where we're gonna see the market reversing aggressively. Plus, that smaller breakout did not really survive that long. We can see that the momentum was not really that strong because those companies were performing very well. All of them, they were doing good, even if some they missed here and there, but the performance was much better.
Yeah, I mentioned a little earlier in the call here, Kenzo, that Apple came out and had really not super impressive earnings. When I went through the numbers, their numbers were not that impressive. It's just that the market really liked that they announced share buybacks and
Mm.
a dividend raise for their investors. So I thought that was kind of interesting. I don't know if you heard it or paid attention at all to the Apple earnings that happened last night. The market popped big time on the celebration of, hey, buybacks for shareholders and dividend raises, and those things are good. But to me, what was concerning is from a consumer read, you had a lot of decreased spending, a lot of slowing revenue for Apple. And so for me, in
Mm.
my opinion, this is not really an exciting move higher. I think it's just kind of cheering the dividend and buybacks.
Yeah, unfortunately, this week I'm actually late on the news. I did not really catch up, but I think at the moment it's where we were going to see those companies suffering. But if they can survive, even if maybe the revenue is not really that much, it's not really that aggressively that much, even if they miss that with not really a bigger point, I think it's still good. And buybacks actually increase the value of your share, so that is also good because uh, things are not really that good. So if maybe they buy back, it means next time when you get your dividends, it's going to be a little bit enough than before because now they own more than the rest.
Sure. Yep, it'll be interesting to see. I mean, if you're going to talk the Nasdaq and the S&P, I think what's really bounced back some of those indices has been the earnings. I mean, Microsoft, Google, a lot of
Mm.
these big companies have really excited the market and helped the rally continue. I believe we get on May 22nd. I could be wrong on that date. I believe we get the Nvidia earnings after the bell.
Whoa.
That's going to be another major one because, again, what really kicked off and has excited this recent AI run in the stock market has been heavily centered around the Nvidia story. So we'll be hearing from that again. Also, I just want to say about semiconductors, right? Chip companies,
Mm.
when we're all using a semiconductor right now in order to do this stream,
Mm.
right? Some way or somehow. So semiconductors are huge in terms of a barometer for the global economy. How much demand is there for chips and computers and everything? So NVIDIA is massive. It's another very important earnings one that I just wanted to point out while we're on the subject of that. Also, thank you very much for the $2.49. I appreciate that for the donation to the stream. Loopings for gold Deutsch. I'm not sure what you mean there. If you're asking about gold, that's the closest thing I think you said. We'll happily take a look at gold. Gold on the daily chart, again, continues to be in an upward trend. And I think that this week data is a positive for gold. But we also mentioned earlier in the call, Kenzo made a good point that the Chinese economy seems to be bouncing back a little bit. And at the same time, some of the geopolitical tension has cooled off. So maybe some of the bullish catalysts are a little sketchy for gold right now. That being said, I'm still bullish overall, and we'll watch this candle here today to see if I can find a setup. Kenzo, I'll let you go. Thank you very much for coming on the show. Before we do let you go, let me just say to everyone who's listening here with me live, we're live streaming on YouTube, 2 different channels on YouTube and on Twitter now. If you guys would do me a quick favor and make sure to go subscribe to Kenzo on his YouTube channel. He puts out great stuff. It's extra hot Forex. Again, click that link, subscribe to his channel. Again, these streams are free. We don't ask or pay Kenzo to come on here. He comes on voluntarily, helps out to support what we're trying to do here as a community, is bring traders together surrounding real fundamental analysis and practical trading 101. So Kenzo, thank you very much for coming onto the show, and we'll see you back next time, man.
Thank you very much, man, and your viewers.
All right. Have a great rest of your day and have a great weekend, Kenzo. Let's keep pushing on, guys. So in terms of the market reaction here, again, NASDAQ continues to push. The stock market, the S&P, continues to push, but we're tagging a level of resistance. I'm so curious to see how these levels end up playing out. We'll just keep watching a couple of these markets. I'm very curious to see how these candles close. I'm letting some time pass between the news just to see how the dust settles. You got the Russell up, the Dow slightly up. Look at the Dow, only up 0.5% on this data. The NASDAQ up 1%, the S&P up 0.66%. Again, things have been very, very volatile, and the VIX down today, but it's been all over the place. It could be up by the end of the day. The VIX, of course, is the volatility index. If you don't have it on your watch list, 100% you should. It's very, very important to do so. Also, wherever you're watching this, if you could do me a favor, hit the thumbs up button, hit the like button, wherever you're watching it. I saw on Twitter that we have, shout out to my friends on Twitter. I haven't streamed on Twitter in a minute, and there is 199 of you guys. Could you do me a big favor on Twitter? Hit the little heart button. I'm trying to grow on Twitter. I don't really know what I'm doing on there other than spewing my hot takes on everything. And I think that's what you're supposed to do on Twitter, or X is what they're calling it. Sorry. Hit that like button wherever you are. I appreciate you guys supporting my content. It's I do these videos for free, these live streams for free. All I ask in return is that you maybe share it with a friend or hit the thumbs up button where you're watching. Okay, let's keep pushing on the dollar index. Kenzo and I had a good conversation going there about the reaction to this level. The question is this going to hold, right? We're tagging a support level. It's kind of like trying to push through like a trampoline right now. That's kind of the feel I get from this dollar index. Yes, you had a print that came in light for the jobs data, but it's a bit of a trampoline right now, right? It's like you're jumping on the trampoline, and is it going to bounce back? Because this dollar index, in my opinion, I'm not an outright dollar bear today, but the bear case has come stronger. We have to admit, right? Jobs print coming in light. That's a bear case to a degree, but look at the full picture. The full picture is still pretty good for the dollar, in my opinion, because the other central banks look like they're going to cut rates first. Jerome Powell even said that in his press conference. He thinks that that's what's going to happen. And while rate cuts may be slightly more likely to happen after today's data this year, this is one print, right? You can't get overly excited about one print. Yes, it is progress, but it's, I made this point earlier. Look at this. We had one print like this over in November of 2023. Now that kicked off a big stock market rally. Don't get me wrong, but we precedingly following that had 5 higher than expected jobs data points. So don't let one number completely flip the boat, right? It is that's not an expression at all. Flip the boat is not an expression. What's a better expression? I don't know. My point is, don't let one data point completely flip your view on everything about this. Is it still overall, a weak day for the dollar? Yeah, it should be, right? The jobs data didn't come in rock solid like it's been coming in, but it's still just one print. You have to be careful not to get overly excited about a singular print. I'm very curious to see how this price action responds as we get closer. And real quick, we're going to be bringing in Ivan and Frank are sitting in the back room. We'll bring them in just a moment. But before we do, I just want to say, if you guys don't have a copy of the Edge Finder and you would like one, check this out. We're doing a giveaway. If you would like to enter the giveaway for a chance to win an Edge Finder copy totally free, we're going to be dropping a link to enter that giveaway. Chandler, if you don't have that link, let me know. You might have it. It's just our usual giveaway link. Let me see. You do have it. Ta-da! Chandler on the ball today. There we go. If you guys want to enter the giveaway for a chance to win a free copy of the Edge Finder, we're giving one away. Again, all you have to do, enter this link right here. It will ask you just to let us know like what your favorite feature of the Edge Finder is, that sort of thing. Please do us a favor. Give us some feedback about what you think about the Edge Finder when you sign up for a giveaway. We're giving away a copy, and in return, we're getting some positive feedback or negative feedback, I guess, from people who are interested in our software. We're a small business out of Atlanta, Georgia. There's about 10 of us total, and we very much appreciate you supporting our content as well as entering our free-to-join giveaway. Chandler, if we could drop that link just one more time in case people are looking for it. It's in the chat right now, and you can find it there. If you're watching on Twitter, by the way, do this. If you're watching me on Twitter, DM my account giveaway, and someone from my team who manages my DMs will respond to you and get you into the giveaway. So type giveaway and send it to me on Twitter if you're looking to join that way. All right, real quick break, guys. We'll be right back with Ivan and Frank jumping in after this. Real quick, I wanted to throw a shout out to our stream sponsor here on the A1 Trading Show, Forex VPS. If you haven't heard of Forex VPS before, they are a dedicated hosting platform where traders, especially algorithmic traders, can set up an in-the-cloud computer to run their MT4 24/7. If you have any experience trading with robots on MetaTrader 4 using expert advisors, they have to remain up all the time, and keeping your computer on is not always practical if you have like a power outage or that sort of thing. And with Forex VPS, you can set up a dedicated hosted computer in the cloud to host your MT4 or 5 platform. They have the fastest execution in the industry with latency less than 1 millisecond, which means when you place trades or your system places trades, it's near instant. So I've got my VPS open here from Forex VPS, and you can see, I just want to show how quick the latency is here. So if I click sell, you can see it is right away. I'm in the trade, all set, as if I was sitting on this computer, even though it's somewhere in the cloud. For stream viewers right now, Forex VPS is offering 30% off of your final subscription. If you're interested in giving it a shot, there's no risk. Why not? Use the link down below and the promo code there, A1Trading30 for 30% off. If you're watching this stream at a later time, you can also find it linked in the description below. All right, guys, and we are back with Ivan and Frank. Hey, guys, how's it going?
Ahoy!
Oh, you got your hat on.
Mateys.
Ivan, you need a pirate hat to join in on the fun.
I haven't been told, bruv. Chandler.
Yeah, it's our theme here this month is Pirate Month, and I'm wondering if the dollar bears are just gonna steal the show here. Ivan, what do you think? Jobs data reaction. What are your thoughts?
Hold that thought for 2 seconds, okay?
Okay, we'll go to Frank. Oh, he's got a hat.
That's the
There
only
he
part
is.
of the thing I can do today.
Nice.
That doesn't count.
No.
You need an eye patch.
Okay,
Yeah.
maybe. Wait. Okay, I'll find something. Wait, I have my sleeping mask here.
That'll work. That's close enough.
Actually,
Okay.
Okay, give me 2 seconds and I will do it. But I don't. I'm surprised. I'm surprised the dollar is so weak that Euro New Zealand, Pound New Zealand, as New Zealand became so strong. It didn't fit my my theory that New Zealand dollar and Euro New Zealand is falling, Pound New Zealand is just falling, New Zealand CAD is rising or ripping through. Hands off! I was thinking it should fall, so I'm out, boys.
Yeah, it was a day for me of a couple stop losses. I hit stop on Euro USD and on the Russell, so not ideal. But of course, we push on, and to me, I was talking just moments before you guys joined with Kenzo a little bit about this jobs print, and I was pointing out this kind of warning to people who are watching this. I'm curious if you guys agree. You know, in November we had a print that came in very, very light relative to the previous number and to forecasts for jobs data. And people got really excited. The market got really thinking, hey, they're going to be super dovish. They're going to cut rates by March. And what happened after was 5 consecutive months of higher than expected jobs data. So I don't know, Frank, what do you think? Is one data point enough, or do you read too far into this? I mean, it was a lighter than expected across the board jobs data point, but how much do you read into it?
Well, it wasn't just one data point that missed. This was a big miss for NFP. So the past 4 months were relatively conservative on the forecast, and we saw considerable beats on the actual numbers.
Mm-hmm.
This time we see a very big miss, way below the estimate. This is what bulls wanted to see. Employment rates up, wages went down. This is what the bulls and risk on assets wanted to see, and it might have broken the trend. Another thing we can look at is the revision of last month. Went from, I think it was like 300 something to now it's like 315, so it went up. So we saw really good jobs up until now, which is kind of concerning, and we'll have to see, because next month's revision of this number is likely, it doesn't seem like it's going to come back up to the 300s. So maybe we're seeing some cooling now, and as much as I want to see the market come down, give back all its gains for the year, which would be like a 10% drop. We're only 5% of the way there, and now we're pairing those losses again in the NASDAQ and S&P. The dollar's looking weaker as a result. So I'm more so now. I'm less bearish than I was. I think in the short term the market's going to find some upside until we have 2 weeks until our next big news report, which is CPI on the 15th. So if we see lower inflation, then that's going to be another continued upside. In the meantime, though, we have good earnings. At least it's what the market is interpreting as better than expected earnings, and tech is doing well, and NFP is showing what they want to see. So I don't want to trade against the indices. I don't want to be to the bearish side, especially if we have this number out already. So, I mean, we'll have to wait until CPI, but right now I think I'm leaning more bullish, just because I don't want to. I don't want it to go higher, but I don't want to sit on the sidelines, and I don't want to trade against a moving train. So,
Sure, Ivan, what do you think? So again, you had pretty, as Frank put it, pretty much all 3 variables came in lighter than expected. But is this a one-off print, or do you think that the trend has been broken for hot jobs data?
I'm trying to understand. I don't. It's outside of my brain capacity to understand at the moment. So I'll just go and get some rum, I guess. But that will light me up. I'm actually bummed out.
Why is that?
And because of pound New Zealand and Euro New Zealand went to stop losses and break even. Okay, the other I took some off. I took half off, and then the rest just went to break even. So I feel like I lost. And then I was thinking dollar strength, and then I was thinking higher than expected. And then I think the difference is that last time was around 300 something, and now we have 175. So the gap the volatility is quite high. But I think the market is taking anything that they can grasp onto to support their cut for this year. But this doesn't support cuts. You have to get PCE, you have to CPI, you need to get PPI down for this to even make sense. This is just one, which is not the most important one. And that this one slips and everything else has to slip. Then we can talk about dollar bearishness. But what I don't know we haven't talked about yet is dollar yen.
Yeah,
is falling like a ton of bricks.
Yeah, look at this coming all the way down to 151.9 at the lows. I mean, that is a substantial slip here. And what's that all about, Ivan?
Oh, thank you for that hand over there. It is Bank of Japan trying to fight the market. They have been doing that quite so often. They have probably because we don't know yet, probably spent 6 trillion yen or something in that direction. We had the Friday, we had the Monday. Did we have something yesterday? I'm not too sure. But it comes and goes lately. But being buying yen, selling dollar, they especially sell dollar when buy yen and selling dollar when dollar's weak or like now. So they have got what they wanted. Back to 151 is a much better place. I think there was like a rumor somewhere that said 160 was their hardcore top. That seems to be the one that it actually worked out on. So
that's the new ceiling now. Is what was the 150 to 152 range? Now the top is potentially 160. Okay.
Yeah. So they have really been fighting, spent a lot of money on it. They've got what they wanted. Surprisingly, I would argue. I didn't see that one coming on Monday, but here we are. So back to 151. So right now, just finding where the bottom is going to be.
Yeah, I mean, you're looking right there at a 5% change in the exchange rate, which is pretty significant when you're talking about major currencies. I guess, Ivan, the question too is that, is this area here, is that a buying opportunity, or would you say be very careful at that level of support?
If you have 1,000 pip stop loss, it's
1,000 pip stop loss. Let's see. Okay, that's maybe 1,200. 1,200 gets you below this area.
Yeah,
and your target is right here.
Yeah, it's a massive risk trying to find the bottom or even trying to sell it. Either way, market, in my opinion, is going to find a bottom at some point. It's impossible to find out when that is. Because it's a very psychological play, because there is no fundamentals, there's no technicals that's going to help you out there, other than actually people starting buying dollar yen again. It can be any time, it can be anywhere. But back again to what I normally say, I always say, now you have your pullback. For those who bought 158, you also be looking for, okay, we're actually coming around here, and the fundamentals are kind of the same, except for the NFP. So nothing much has happened, other than you got a way better price. So being excited at the downfall is the mantra.
Sure. Yep. And U.S. stock market just opened up too, just moments ago. We'll see how there is a, you're getting some increased volume here for the indices. I guess this is the next question on the day. Is this jobs data? This is probably the most tricky question for the day. Is this jobs data that just came out positive or negative for the stock market? Now, obviously, you could say, well, it's up. It's positive for the stock market. But is it really? That's the question. Is a weakening jobs market good, or is it bad? Frank, what do you think?
I mean, it's not good for stocks, obviously. It's not good for the economy, but the narrative is, it shifted from, 6 rate cuts to now, are they going to hike? And then that fear subsided with Powell's testimony in the FOMC statement and all the questions he was asked. And now we have worse NFP. So I guess now they're thinking, okay, rate hikes are off the table. It might just be going off that hype now. So I think this might be good for stocks, for indices at least.
Ivan, do you agree or disagree?
The mathematics that I don't have in my head is job losses better or worse than lower financing costs? Then you can say AI come in and say, great, we don't need so many people anymore. But I think it's going to be, it's negative overall. But any news is good news for the stock market, seems to be. Also take into account, since last year, December we started to increase, January we started increasing CPI a bit more.
It sounds about right. Yeah, January, February, March we had a trend of hot inflation. Yeah,
and stock market rose.
Yep.
So make sense out of that. So I don't think this is going to make or break anything. But hey, it is May, and it is election year, so we might have.
Yeah, and I think that where sometimes people get tricked up with stocks specifically is that they have something different than, like, if you're looking at gold or you're looking at the dollar or something, you're really honing in on the economies of the world. But stocks have this whole side story, this like sequel to them, which is stock earnings, right? At the end of the day, it's tracking a market of stocks. How are they performing? Are companies earning a lot of money, or are they struggling? And I'd say that this earnings season has overall been a pretty good one. You've had the big names coming in strong. So I think that could continue to support the stock market. The thing for me is,
go ahead. You know what didn't open higher today?
What's that?
Which was surprising, the gold.
Your chest of gold.
Yeah, look at this. Look at this. On the pirate month, you think gold would be going straight up, right?
Gold does well on poor economic news in general, and it's going to do well with the expectation of no hikes and lesser, I guess, interest rates lowering over time. And this thing is falling still on the day, which is kind of confusing.
It's confusing.
So
let me give you
if you guys had any idea.
Yeah, I'll give you a quick take. Okay, so quick take on gold. This is courtesy of Kenzo, who was on just before you guys. He made some really good points that I just want to reiterate. He said, number one of the biggest buyers recently has been foreign central banks, and specifically Chinese people who have seen their stock market get stomped. Now the Chinese stock market is doing quite well, relatively speaking. Frank, you pointed that out to me yesterday. I mean, the stock market's up for China. So economic data perhaps upbeat for China. So now suddenly you have the story for gold becoming less attractive from that side of the things. On top of that, you also have the lack of the same reason oil is down, right? Oil is trending lower because geopolitics have cooled off. So you're losing some of the other stories. So yes, jobs data is light and uncertainty should pop gold. The other big uncertainty is war and the Chinese economy, which have restored some confidence. So I think you're getting kind of a mixed picture. What do you think about that?
Yeah, I guess I wasn't really going into that frame of reference, but yeah, I guess China's economy and the US economy doing better, I guess, subsides those fears. But you would think if China's doing well, it should be good for gold, right?
Yeah, I think that just the mass demand for it from the Chinese people, Chinese investors who have just probably gotten tired of seeing their stock market just get destroyed for so long. I mean, it's had such terrible performance relative to peers and relative to the rest of the world going into gold. But again, seeing some good earnings out of the U.S., seeing some bounce back in China, perhaps it's just restoring a little confidence. Ivan, is there anything that we missed on that? Gold, why is it down today with jobs data coming in light?
You have to kind of see a couple of things, Frank. I'm not tossing you under the bus, just jump in the boat, sinking boat here. You wouldn't buy gold if everything is going great in the stock market, because you would be getting better returns. So gold is when you're scared and everything else. So that can be one reason. Second thing, it seems like the buying season is over for whoever it was, central banks, national governments, because that's really driven gold to, I don't know, what was it, 2,000 something, 2,400 something.
Here's another thing. Those fears of the hikes going away caused yields to fall. So watching the 2-year drop down to support here on the 1 day, it's now at 4.7, and a couple of days ago it was testing above 5. So that's what was keeping the market at bay for some time. And now that it's dropping, yields and gold kind of they move. Well, actually, no, they move differently. So I'm still confused.
I have a point.
The stock market, I guess, doing well, better than what people have feared, and the economy being more resilient, or less resilient. Oh my gosh, it's like it's such a mixed bag. Like I don't really understand, but I was betting on volatility this week, and hopefully it plays out, because I have a iron condor trade on the NASDAQ, which is just TQ, and price has got to move here or here by expiration. The fact that it's already here is good. So the option is more expensive now, but now the question is this just the initial pop, or are we gonna realize, oh, this is bad for the economy, seeing worse NFP? And right now we're still sitting at higher stubborn inflation. So if we see NFP lower, and then 2 weeks from now CPI comes out higher or the same, that's not going to be good for stocks.
Guys, I had one thing that did go well for me. I mentioned I had a couple things hit stop today. My TLT, hey, you know what? TLT's coming back to life here for me. We will take that. I will take anything.
You what?
I'll take anything I can get right now, because I had a couple things hit stops today. Euro stopped me out. Russell stopped me out. But TLT is, of course, the government bonds. With all this talk about yields, I checked in on my position here. So the 20-year yield is correlated, of course, to TLT, which is a bond ETF. So I have a bullish position on TLT, which is looking not great, but a lot better today than it was. I had my one winner. I got one thing going well for me, and there we go. So yeah, I think, Frank, when you talk about the NASDAQ here, the rate cut story is disproportionately affecting different areas of the market. You can see it pretty clearly with, like, the S&P's up, 0.62%, the Dow's up 0.6%. But the NASDAQ's like nearly doubled their performance. We can also take a look just really quick at some sectors. I have a bullish position on the semiconductor ETF, SMH. So semiconductors are popping big time today. The technology ETF, I also have a bullish position on this one, popping huge today. Discretionary spending up 1.27%. Little concerned about this because we've seen so much discretionary spend be disappointing. We haven't talked about Apple earnings, but Apple earnings were not very glamorous in my personal opinion. We'll talk about that in just a second. XLC, this is your comm services, up a little bit. The big winners today are the rate sensitive stuff. Here's real estate. Real estate up just shy of 2% on the day. And then you have more boring stuff like XLF. This is the financial sector, up just slightly. So really the winners on the day are the really rate sensitive types of sectors. So I wanted to just also follow up. I don't know, Ivan, if you pay attention at all to big tech earnings, but Apple, in my opinion, could be totally off base on this. I think you sell this pop, just my personal opinion. I don't know if you saw did you see any of the earnings data on it?
No, I don't really see those notifications on Squawk, but I haven't.
So basically what happened is the overly simplified version is that The reason the stock popped, the positive were buybacks and their dividend got a raise. So these are positive things. Don't get me wrong. They pledged to buy back more of their shares, which is good for the investor. If you hold shares and the company is buying back their own shares, your shares look more attractive. Okay, cool. But many people, they also raise their dividend. The bear case on this is, you can call this financial engineering, which is just the idea of like, you can make your stock look a little bit better by doing things like this. But why isn't Apple taking the massive amount of cash that they have and investing it in AI? I don't own Apple, but if I did, I would be more frustrated by this. Don't buy back shares. Don't raise the dividend. I want you to take that money and go earn way more on it by investing in technologies that are going to change the future. Where's that massive Apple innovation? So that's my thing. Now, the negative is that revenue for this company was not very impressive, not huge growth. We saw iPhone sales slow, North America slowed dramatically, Asia slowed dramatically. So revenue, not super impressive. This is a consumer barometer. Even if you don't trade the stock, hear me out. This stuff is very important to the US consumer. Okay. So consumer came in a little bit sad, at least on Apple earnings. Frank, did you have anything to add? Did I miss anything on that?
For Apple, you mean?
Yeah.
No, I think you covered it all.
Okay.
It was not very impressive, but I think it was like the dividend that you talked about is something that causes a lot of bullishness. It happened with Google too, but Google also had stellar earnings. This was not impressive. So I'm kind of with you on Apple has pretty limited upside, and the AI trade is such a new market and it's a huge growth opportunity, as we've seen.
Yeah.
I don't know if it'll sort of fizzle out over the coming months, but that sort of industry is projected to, it has so much money poured into it that it's going to get better regardless. And these companies that are taking advantage of that are going to experience another period of growth. So Apple right now is kind of like a blue chip. It doesn't move very hard in either direction. But if they pursued this sort of thing, I mean, there are risks to it, but it's a whole nother area of growth, and it can redirect their sort of business model in some kind of way to be more of a growth stock or growth name.
Yeah.
And
see, that's, Frank, what I'm saying is, if you're an Apple shareholder, I'm frustrated. I don't own it, but I'm saying if I did, and I have in the past, and I thought about buying it, if we had, a couple more weeks of downside, I was going to look to buy it. But they're almost like leaning into becoming more of a, as you mentioned, a consumer staple rather than being a growth company. Like don't abandon the, if you just dial it back and say, oh, well, we'll just buy back shares and raise a dividend. If you're someone who's a growth investor, you want to see innovative technologies that are next level. Now, I'm not saying Apple is out of the window or anything. It's still a powerful, major company, but the expectations for this company should be high. And they're just, to me, they're just kind of a disappointing, lack of innovation relative to their peers. We'll see.
Well, yeah, they're not innovative that much anymore. I mean, they focus on iPhones. They don't really do much else anymore. Apple used to be the powerhouse of innovation, and now that it's at this level, it's like they don't want to change anything. Maybe Apple will be like the Coca-Cola of tech stocks. I don't know.
Yeah. And Ballout says, why would you short? Well, I'm not talking about shorting it. What I was mentioning is I said I would sell this rally. I don't own the share. This is my opinion. If I had shares, I would have sold some of it today because, again, not a very exciting, call in my view.
Especially if the consumer is spending less with inflation as it is now.
Yep.
If it rises, no one's going to be buying iPhones as much as they used to. And that's like their main product. So
sure,
there's going to be a whole lot less spending in the market, and they're going to see a lot less demand on that front. And frankly, probably see no growth.
Exactly. Ivan, I have another question for you. People are wondering about the gold drop. So I pulled up the dollar index just to see what's going on. Look at this dollar coming back into this supportive area. If we close here today, let's just pretend that it's 11:59 and the market's about to close. Is this bullish that we're holding a support level like this? What do you think?
No.
So you're shorting it?
No, I can't do anything.
Okay.
If you're in the middle of the ocean, Nick, and you're like, can I have a party here? Yeah, you can. But also, where? No, you're in the middle of the ocean. You're alone. You're on a boat. Also, there's nothing you can do. You can't go to shore. There's nobody to be around. So,
well,
your hands are tied.
Yeah, I mean, that's true. That's true. But to me, it's like we go back to the concept of it's one print. To me, if we hold this area, the dollar bullish case, I'd still give it a chance. Because again, I think relative to its peers, the story is still intact. The story of rate cuts, who's going to cut first. I think the dollar is not likely. We all kind of said it. The idea, the push for rate cuts, this is not enough evidence to just say, oh, rate cuts are now. So to me, it's like that dip might be an opportunity. So I don't know. We'll have to see.
It is always going to be an opportunity, Nick. But there is a difference between what's your setup, what's your profitability, and what's your probability of making money in a situation where you have, what has it been today? Has it been like a good 0.62% of a drop, like 65 pips drop? It isn't like shouting higher for longer, at least the market. So I think it's a good drop. My only problem is how long is it going to last? It's going to last until mid-May, end of May, June, July. Also, what is the clue? So that's my only problem, because I don't like this bearishness out of nowhere.
Yeah. I also wanted to pull up, just while we're on the subject here, September is probably more live now, right? So first rate cut now expected pretty solidly, at least for now. We'll see where this changes, or if it does change. Expected to be September. So September of this year. I'm just curious, did that pull anything forward to July? July expected to hold pretty decisively, and June we're probably not seeing a cut. So unless you get, and by the way, guys, we do get in 12 minutes, we got PMI data. So that will also be a pretty important thing. This is services specifically, which is a big component of the US economy. Comes out in just over 10 minutes. We'll see if it moves the needle there one way or the other. Pretty much expected to see rate cuts by November. But just remember, before you get overly rate cut excited, this thing has also been moving. The trend has not been friendly to people who are thinking rate cuts are coming. It keeps getting pushed back further and further. Doesn't mean that won't change, but something to think about.
Well,
do you want to say something?
Here's something to add about that. Even if rates come down a little bit, that it's still nowhere near the 2% target that the Fed wants. So lower inflation does not mean rate cuts. It just means we're getting closer to that goal, which means we can still hold out at these levels of interest rates for the next year or so, or maybe longer, until we get to that point. But we just need to see jobs cooling and prices coming down. And up until then, why cut? Why cut until we're at 2%? Like even if we see it come down next report, that doesn't mean, okay, by the end of the year we're going to cut. I feel like, where's the logic in that when we're trying to get to 2%? Like that question should come up when we're at 2%.
Yeah, and it's like this concept of inflation. It's not even trending in the right direction yet. I think that you can look at the jobs data. This is not wanting to work today. The jobs data, trending. The trend is very important. Also, we did get the update. Here's what it looks like with the revision in there as well on our chart. And also, bullish setup did form for gold here, as I mentioned earlier. Again, a tick up in excitement there. Bullish took the #1 spot even with employment change and unemployment rate both signaling some weakness there. Frank, I think you mentioned that earlier for gold. It's going to like that. But again, I still, with the geopolitics and China situation, I'm just going to watch for a technical setup that looks good. But do you have a position on gold, Frank?
No, not anymore. I sold out earlier this week for hardly anything.
Okay.
And I was looking to get back in, but now I don't really know with gold. If it holds here, then maybe. But it looks like it had broken below Monday's low, and I got this trend line. I don't know if that's really an important one, but this was sort of like a higher highs trend line, and now it's testing that. If it holds, maybe. If it breaks lower, then just look at support levels at 22.22 and lower 21.49. You can always test those levels if it hits that. Today, if we see a bullish hammer, I mean that's kind of a good sign that price wants to hold up there. And we have COT on at 3:30 today, so we'll see what smart money wants to do with it, and maybe I'll look Monday for trades on gold.
Yep, should be interesting. Frank, Ivan, any thoughts on gold? Do you you don't really trade gold very frequently, do you?
No, I don't. Especially when it goes parabolic.
Which is like frequently.
Yeah, which is not recently. Should have been in it. 20% up is a good deal. I remember previously saying, well, it's going to go up this year. But hey, yeah, it caught me on a different chart, by the way. But I think I said when it was the beginning of April, must have been somewhere in this direction. I'm like, how much longer can you hold it? And how much more extra are you going to pay for it to be able to get into a move, which is the same price as now is as a month ago. So if you chase it, it burns.
Yep. It was a crazy move over the first couple months of the year. We're finally seeing kind of a reversal of that trend with, again, all the way through April for the most part, just a straight shot this year, actually outperforming the stock market pretty substantially. Now starting to pull back a little bit. Again, I think with an election year, that's another reason I'm kind of interested in gold on the long side too. I think uncertainty is uncertainty is usually coupled with bullishness for gold, and uncertainty is always a good combo with elections. So I will be looking for bullish setups myself. We'll see if we can find something. Stock markets are ripping here. The Nasdaq's up 1.51% on the day. S&P, they're testing now these key levels of resistance. Let's see how they react here. If we break up into this territory, that looks really good for perhaps a continuation, and maybe we go back to retest the highs. We'll have to see. We're just about 5 minutes or so here before PMI data comes in. We'll just kind of see where we're going there. Ivan, any other things that you're watching that you want to talk about?
I just wanted to self-promote here a bit for 2 seconds.
Yeah, please.
Can you see my screen? I don't know. I can't see where your screen are. There it is. Cool. I posted this pound New Zealand trade around, was it 24th, 25th of April? I took profit at 112, also 212, sorry. And that's what happened afterwards.
Wow. Very nice. That's a great self-promote, Ivan. That's awesome. I wish I had more trades that look like that. That's beautiful.
Why didn't you short at the highs?
Yeah, why didn't you short it?
Yeah, why didn't you short it? Look at the money I made.
Just kidding.
No, that's awesome. So are you still so you're not in this one anymore? Are you
No.
Looking for any other trades on pound NZD?
No, not really. Well, I was thinking I should go higher. But the lesson here is this they call it velocity. I call it velocity. How quick it went higher. And my mantra is the faster it goes higher, the faster it will go lower. So I think that is relatively accurate in this situation. So I'm glad I added that rule to my trading. But I'm bumped out. I don't have anything at the moment. I had how many hours ago? An hour ago, I had New Zealand weakness on my chart. And now I am, I don't know, maybe yen weakness? Not really. So I think I'm going to have a very good weekend. And I'm not going to do anything. I'm not going to look at the markets because I need something to turn around at some point. Dollar strength or New Zealand weakness. Maybe Monday. Maybe Monday is a better day. Maybe it's a blue Monday. Who knows?
Yeah, nothing wrong with that. I mean, if you got no setups, there's nothing wrong with just taking the weekend and resetting, coming back fresh and looking for new setups. I'll be very curious to see what happens with those yen pairs. They're super volatile right now. Question is whether or not this dollar yen will hold that 152 level or not. And again, we're just a couple minutes here from services PMI. This will probably be market moving as well. Again, let's just take a look while we've got the PMI data. Why not show it? PMI data here for manufacturing, by the way, it came in light last time around. And then the time before it was actually positive. Also, I don't know what's going on with the Edge Finder today. I'm having to reload my browser, I think. So PMI data came in the previous time before for manufacturing came in really high, really hot. And then the latest manufacturing came in light. I don't know what's going on, Frank, because yours pulling up. I don't know what's going on with my Edge Finder this morning.
Yeah, let me see if I can get it.
Maybe the Edge Finder is just taking an early weekend, just like Ivan.
I'd be tired of all the analysis.
Yeah, it's like, just leave me alone. You open me 36 hours a day.
Where is it on my screen? I don't even have it open even.
I don't know why it does that sometimes. I think it usually only happens to me when I'm streaming, but my new computer is like super powerful, so I don't understand why it's struggling today.
You have a new computer?
Yep. It's a I don't even know what it is, but it's got like a really powerful graphics card and all that stuff. It was a pre-built CyberPower PC.
Yeah, I'm not seeing PMI either.
Okay,
GDP,
maybe it's
however, is showing up, which is good.
Okay, and we are just about 2 minutes out, guys, from the PMI data. In terms of expectations, really quick, we're expecting 52. Previously, we saw 51.4, so we're expecting some expansion. Let's see how this wants to play out.
And if that comes in higher, that's just today's probably just going to be in the green.
Yeah, that if PMI comes out hot, that's just straight up good for the stock market, I think.
But look at this, Nick, on the 2-year. You're talking about if rates hold at that level, and so far it came all the way back up and closed around that support, and now it's looking like it wants to move higher, although it could very well sink. But this is
look how correlated that is to the
important level
USD.
that it came back to. But yeah, we have only 1 minute now.
Yep, coming in about 1 minute out. I'm gonna just go ahead and set up my screens here so we can watch everything. For our friends listening all over the world, we got stocks over here, stock indices, the dollar index, the pound, the euro, gold is right here, and oil is right here. Again, we're coming into PMI data just about 30 seconds out or so. So higher PMI would mean lower DXY. No, higher PMI would mean stronger dollar index, as that would be economic confidence. Lower than expected. It's all about the forecast and actual. So
if we saw higher unemployment, lower wages, lower NFP, you'd think PMI would be lower then, or I don't know.
Yeah, maybe so. Maybe that has some correlation there. We'll have to see. Coming in, breaking news. All right, let's see what we get.
Ouch.
2 years coming up.
Dollar index slightly lower here.
49.4.
49.4. Coming in light. So now the question is that good for the stock market? Now you've got dual misses in terms of economic data here this morning. And that should be good for gold, right?
What's gold doing?
Higher. Yep. Stock market dipping a little bit here. That is, I mean, that's a pretty decisive miss. Is that not, Frank? I mean, that's a pretty big miss.
Yeah, that's contraction, which is, I mean, not good for the market, but also good for lower interest rates, I guess.
Yes. So that's where I think your reaction arguably could be mixed, because again, rate cuts, okay, yes, but also company performance maybe not so hot because of that. I don't know. Ivan, what's your take? Dollar index, is that going to change anything here for the day?
Lower than expected PMI should be good for stock market. Bearish for dollar. So I think what we're seeing is it's a bit of psychology. I have to argue, because if a stock market now is pulling back, it's because the moves already happened, and then it's just trying to fetch lower prices. Or they just could be opposite. Like good news, bad news is good news, and good news is bad news. Going totally opposite on us, because they should have fallen on the NFP and should have risen on this one, and now they're doing the opposite. But to be honest with you, I think this is gonna trigger at least a bullish trend next week on the stock market in total.
Fair enough. Fair enough.
Well, what do you think is heavier news? Is it NFP or PMI?
Probably NFP, right?
I would think so too.
Is it? Because PMI has more. NFP has been pretty okay, a bit higher than expected for quite some time now. It's been strong. It's been pretty normal, also pretty the same. Around 200, high 200s, up to 3. So yeah, it's been quite constant. So the miss today might shake that up a bit. But I would actually argue PMI. Because PMI is activity activity in about 1 to 2 months down the line. NFP is previous or current.
This is the first contraction since January of last year.
Interesting.
Yeah, that's significant. But yeah, so I think that's going to be, yeah, I think that's going to be good for the stock market overall, because it, at least that fuels more than NFP, fuels rate cuts coming in. And then if you add bearish CPI on that one, then you have a whole ball sack of negative news that is good. That was going to lead to lower interest rates. But it's just 2 indicators. It's not the entire world.
It's fair enough, guys. I went long gold. I am. I'm taking the stab. Just put my trade on. Give me a second. I'm going to be writing this up. I'm taking a long on gold. I'm going for stop loss here. Hold on. 1.5, 2262. Okay. I'm going to be boring for a minute here as I write this up, guys. So one of you guys take the lead on something. I'm just going to write this up real quick.
Ivan, what do you think of Bitcoin?
That was a random question.
That's the real
not random. Bitcoin was falling on the fear of higher yields, and then that fear subsided. It's now coming off a major support level. I mean, it's trading like the indices. I was wondering what you thought of it, especially after the halving and monetary policy shift in sentiment. I don't know, if you don't trade it, then no worries. But
no, it's all right. I can give you it. Also, you are right. Also, my stance on Bitcoin is that it's the riskier brother to the stock market.
It's like a leveraged ETF.
Yeah, more than anything else, because we're going from like 40,000 to 72, 73,000 in the span of, what is it, a month? So it is incredibly volatile, and so what is it, 90% up in 51 days. So my stance is, I guess I have changed my stance. This is one where you hold on for dear life as it goes higher, and then you try to not be a part of the very deep pullbacks. So it's a very active asset in so forth. But the amount of things you can lose and the amount of things you can gain is always fun. So I think it's like, if there's one asset I'm going to answer is going to be the most gambling asset out there, it's going to be Bitcoin, due to volatility. And
Ivan, I just put my life savings in that, and you told me it's the biggest gamble ever.
Yeah, what the heck?
Man,
I logged into your bank account and I bought $1 million worth of Bitcoin. I hope you don't mind. I'm just kidding.
And to be honest with you guys, at the moment it's clear, and this is not financial advice whatsoever, but in my mind, the moment in a scenario, stock market included, gold included, the moment it is clear that we're going to have cuts at some point, I think this is going to have a very fun ride. Not financial advice whatsoever, but structurally, what should go higher when there's going to be lower rates is going to be stock market, is going to be gold, is going to be also it is risk on, clearly. So also New Zealand is going to have a very good field day as well over time.
All right. Bitcoin, we've covered everything. Covered everything from Bitcoin to currency pairs to sectors to stocks. Did a little bit of everything today. And Ivan, you did a really you plugged yourself earlier, but I'm going to give you a proper plug. If you guys are looking for one-on-one coaching, Ivan does that. It's a phenomenal service that he offers. He also does, for those of you who are Discord members within the A1 Trading Discord, are you still offering your free 30-minute call, Ivan?
Yeah, I think we'll have one on Tuesday.
Okay. Last call for that. If you guys would like to schedule a call with Ivan to talk about your trading, to work through something that you're looking to improve on, Ivan does offer one-on-one mentorship. If that's something you're looking for, you can message him. Here's a couple ways you can find him. If you're in our Discord channel, just find Ivan's username. But if you are not, here is Ivan's YouTube channel. Make sure to go subscribe to him, and you can find information where you can chat with him directly through that. Please make sure to go subscribe to him, support our content by supporting our guests. And Ivan, thank you very much for coming on the show and having a good time with us.
Thank you very much.
Thanks,
all right,
man.
see you, Ivan. Boom, got the fist pump. Perfect. Same thing, Frank, thanks very much as always for coming on, hanging out. And for your sake, let's hope the NASDAQ rips 3% from here. And I would love that too. I've got a lot of my SMH, my XLK. They're up today. I'm not as much up as the NASDAQ, but I think I'm about on par with the S&P. So I'm still positioned to be a bull. And my Russell short stopped out. So full steam ahead to the upside, please. That would be great.
Hopefully, yeah.
Yeah, same thing with gold. Cool. Thanks, Frank, for coming on as always. And we'll see you back next time, man.
Bye.
See ya. Wave that sword, man. Wave that sword. I got mine too. Anyways, guys, that's going to wrap up the show here. We did an hour, 2 hours actually. If you enjoyed this, if this was helpful to you, I've got people who are watching us on Twitter. I've got people who are watching us on YouTube. Wherever you are, I sincerely appreciate you watching our content. We put a lot of work into these shows, and it means a lot to us, just the support we've been getting. We've been getting so many comments that are so positive. So many positive words have come through. It's very inspiring to myself and the rest of the people behind the scenes who make this content. Thank you for the support. I hope this was helpful to you. If it was, smash that thumbs up button on your way out, and I hope you have a great rest of your day. See you guys.
Thanks again for watching today's show. Our goal at A1 Trading is to share free value to you, our audience, through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more, lest ye walk the plank. Join our crew as we head out to go long on gold. See you next time.